All right, let's get going. Thank you all for your time today. What we're going to do today is cover the types of plans you can create with VisionWorks. There are three basic types, starting with something which is very simple and easy to do through as detailed a cash flow-based model as you wish. We're also going to look at how you can convert a simple retirement plan into a full cash flow-based plan. We'll also cover the use of the PDF questionnaires. These are fillable questionnaires, but the data that you enter into them can be imported into VisionWorks, which makes for setting up a plan very efficient. And then we'll also look at creating a file from scratch, and then a couple of other things like the options menu and the help window. So the intention of today's session is really just to get you going. And in particular, if you learn how to use the PDF questionnaires, you should be able to set a plan up quite easily and then start to play with it. So the first thing I'm going to do is just open VisionWorks. And I want you to notice in the files list that I already have three types of plans, an RP we refer to as retirement plan, REP, retirement and estate plan, FP, financial plan. These are just little reminders that I actually attach to the name of a plan. So if we go to the retirement plan, I've named this Smith, Bill, Sue, but I've added the little code RP to remind myself that this is a retirement plan. And the reason that I do that is simply because what we found in the past is that some advisors may be going back and doing a plan review 2 or 3 years later, and they forgot that they did a simple retirement plan. They're looking for the full financial plan features, not finding them and thinking something's wrong. So I always like to encourage advisors to just remind themselves what kind of plan that they've created. So I'm going to open this up just to run through a few things so that you understand the basic concepts. In all of our files, I just deal with Bill and Sue, and in some of them, Bill Jr. But I want you to notice in this particular file, there's nothing here about values. There's nothing about wills. There's nothing about financial attitudes. And if we go down to solutions, you won't see anything here about the estate output or the insurance calculations. So the intention of the retirement plan is as simply as possible to be able to answer clients' questions. Will I be okay in retirement? One of the other things that in these plans is that we are actually showing the financial projection through the life expectancy of the second to die, less 1 year. And the reason for not including the final year, and we'll talk more about this in a moment, is that in the final year, we can have what I call estate noise. So one of the things that you'll learn is that VisionWorks can include the terms of wills, which become very important when you're dealing with clients who are in second marriages and have blended families, and where assets may go to children from a previous marriage. That can have a profound impact on the surviving partner. So the very last year of the plan can really muddy the waters. If Bill predeceases Sue, for example, leaves assets to a child from a previous marriage, then that can have a very significant impact on Sue's well-being. So we want to avoid getting into any of that estate noise when we're talking about the very basic plans. So I'm just going to close this. And remember, nothing about wills, nothing about the estate output, nothing about insurance calculations, just the simplest possible approach to planning. If we open VisionWorks again and select the retirement and estate plan, again, what you'll see here is nothing about the values exercise, nothing about financial attitudes, but now we have the terms of wills. So we're integrating the terms of wills into the financial forecast. This is something that we talk about in a much later training program. For now, we just want to deal with the very basics. The other thing that I want to show you about the retirement plans and the retirement and estate plans before we look at the full my apologies. If we now go down to solutions, of course, now what you see in addition to wills in the navigation pane, wills being the cornerstone of estate planning, we now have the estate output, and we now have the ability to do insurance calculations, life, DI, CI, long-term care for both Bill and Sue. So the basic retirement plan is, will I be okay in retirement? The retirement and estate plan is, will I be okay in retirement? But what impact will the terms of my will have on any of the estate output? And then also, what my insurance needs be. So coming back to the general expenses, I also want you to notice that there's a difference in math between a retirement plan, retirement and estate plan, and a full financial plan. So the concept of a retirement plan is very simple. We're preparing for retirement. And basically what that means is, how much have you got in the different buckets right now, TFSAs, RSPs, et cetera? How much are you contributing every year? What rate of return is being earned on those growing pots? And will the pots be sufficient come retirement in order for you to be able to enjoy the lifestyle you want? In other words, you'll be able to pay your expenses on a go-forward basis. So in the interest of simplifying all that, focusing just on retirement, what the software does in the pre-retirement years is it's concerned with things like TFSA and RSP contributions. But when it comes to expenses, anything that's not explicitly itemized, like contributions, we're assuming that all other funds are all other income is being spent. In other words, there are only two things you can do with money. You can spend it or you can keep it. So in the pre-retirement years, we're only interested in the keep, because that's what's helping you build the pots for retirement. But then once retired, we're interested in what you spend as well. Now, there is a little bit of a twist to that, and it's simply that we are interested in, of course, in certain sources like career income. This is combined for both Bill and Sue. And we need that for things like our RSP contributions because of limits. And then when it comes to uses, we are interested, if you choose to do this, and we'll look at this a little later when we talk about the PDF questionnaires. If you choose to do this, we are interested in home expenses, vehicle expenses, because they're things that can change over time. And I would also suggest vacation expenses should be worked in. And then, of course, one of the other uses that we are tracking is income taxes. And you can see here that we're doing a T1, including all the non-refundable tax credits by province. And we're doing it every year in the plan. So you can go out to some future year and see how things might change. I think actually I have them retiring in 2030. So you can see in the future OAS and CPP. So there is a difference in math in the retirement plan and retirement and estate plan. There are only two things you can do with money: spend it or keep it. We're just interested in the keep pre-retirement. And then we're interested in the spend once retired, because that's the rate at which the pots will be drained down. Let's switch over then to the full financial plan. And again, it's Bill and Sue with FP, just to remind us that it's the financial plan. And you can see here in the navigation pane that we've added certain things like an exercise on people's values, an exercise on their financial attitudes, really how they deal with money more on a day-to-day basis. Of course, we still have wills, and therefore we still have the estate and the insurance output. But the difference from a math point of view is that we're talking about cash flow in every year of the plan. What are your sources every year? What are your uses every year? And one of the things that we like to talk about is that the industry has become so focused on retirement planning, but many of clients' questions are not about one day, someday I'm going to retire, but they're things like, I want to renovate the kitchen. How much kitchen can we afford to, put in place? What kind of costs can we afford? So what we talk about when we discuss financial planning and life planning actually, is that the real purpose of planning ultimately is to master change. We all have to manage it. And the only way to master it is to use realistic planning software that acts as a practice field for real life. So VisionWorks enables you to help clients test their options and assumptions so that they can see the long-term impact and thereby make the most informed decisions possible. So again, what we're saying is, if you take a whole life approach, you are able then to help clients answer their more immediate questions. Dan Richards once coined the term the client 99. And basically what he said is the most effective way to acquire a new client is to focus on what the client thinks of 99% of the time. Whereas often in the industry, we move through that very quickly. How much income do you want in retirement? So that we can focus on what we think about 99% of the time, which is portfolios, insurance needs, tax optimization, and so on. So one of the reasons that we have this full approach, retirement plan, retirement and estate plan, and financial plan, is because many clients are just interested in something simple, but often not necessarily because that's what they really want, but more because of a perception that they might have about planning. So there's a term that I like to use, and the term is referent. And what reference says is that we all understand concepts based on what we believe we already know about that concept or something very similar to it. So I would say in this day and age, most people have an idea of what a retirement plan is. So if you say financial plan, they very well may equate that with a retirement plan and have a perception of what that means already in their minds. And that perception could be very different from what you have to offer. So one of the advantages of being able to do a retirement plan very simply, and we'll see how that's done when we get to the questionnaires, is so that you can start clients off that way. Then you can do things like include certain tax optimization features that are built in, show clients value, and in showing them value, hope to encourage them to, take a deeper dive into planning. So often it's clients' perception of planning. I'm not sure I'm going to get a lot of value out of it. Don't want to take a lot of time. Just let me know I'll be okay in retirement, so we can accommodate that and then hopefully move them up the ladder, so to speak. So if we start with a retirement plan, in order to convert it into a retirement and estate plan or a full financial plan, all we need to do is select edit, select retirement and estate plan, for example. And I always like to just remind myself how I started. And you'll remember that the retirement plan does not have the will and the navigation pane, does not have the estate output or the insurance calculations. So I've just selected retirement and estate plan, clicked OK, open it up, and now we have the ability to add the terms of wills. And if we go down to solutions, we have the estate and insurance output. So we can start simply, and just within a couple of clicks, we can convert into a more full meal deal plan. So let's move on to questionnaires. These are used to very efficiently create retirement plans. There are actually questionnaires for all types of plans, but the retirement questionnaires are the ones, retirement plan questionnaires are the ones that are used most often. So I'm just going to open one up. By the way, these can be branded, which means logo, business card, colors, and so on. So I'll just run through it. You'll see it's very simple. Bill's first name, last name, date of birth, same for Sue, that sort of thing. And then down here, how much income do you want in retirement? And you'll notice we suggest not including home and vehicle expenses in that amount, and I'll talk about that in a minute. But otherwise, salary or self-employed income, when do you want to retire? Do you have any rental properties? What kind of income do you get from those? Do you have a home, a vacation home? What are the expenses associated with them? And then you'll see here, for example, do you have a vehicle? What kind? Let's just say it's a sport utility. What do you pay for them? $50,000. What does it cost to run them every year? $10,000. When do you want to buy the next one? Let's just say 2025. And how often do you want to replace them? Let's say every 5 years. So it's easy to add the vehicles in. And then otherwise, as you can see down here, things like what have you got in your TFSA, RSP, et cetera. And then what happens is clients click the submit button. An email is then generated. A data file is extracted from the questionnaire, attaches itself to an email, and then the client sends it to you. Now, I would suggest that very few clients will probably complete questionnaires. Nobody likes to do them. So my recommendation most often is that you use the form, but you do not send it out to clients, but you either have a paper-based version that you just use if you're in a meeting with a client, or otherwise, if you're on screen like this, either you or an assistant would just run through it pretty quickly with a client, and that way walk them through and make sure everything is all set up. So all that happens is you click the submit button. You can enter a password. I don't think it's necessary. Put in your email address, whatever it might be, and then when you click OK, then what happens is an email is generated. This data file is extracted. It's sent to you. You open the email. You save the data file in the client's name. And once you've done that, then what happens is you're able to run VisionWorks. Say I'm starting a new plan, click add. I'm importing from a questionnaire. It's a retirement plan. I'll just call this demo RP for today. You locate that data file that was extracted from the PDF questionnaire. It's a special kind of file. It's called an FDF file. And it has, as I said, not only the data, but it also has an address system. So we just select that file we saved in the client's name, open it up, and then everything that was in the questionnaire is automatically imported. The whole file is set up. So you can see we have Bill and Sue. We're using the FP Canada life expectancy ages, so you can go in and edit those if you wish. But otherwise, if we go down to entries, for example, their home is included, their vacation home is included, their general lifestyle spending is included, the vehicles are included. If I flip up to Bill, he said that he's making 120 grand a year. He wants to retire at 65. You can see ages on the top, years on the bottom, that's 2030. Sue wants to retire at the same time. She's making 75 grand. So when she retires in 2030, she'll be 60. And then if we go down and look at our RSPs, for example, she'd indicated that she contributes the maximum every year. So maximize is selected. Current holdings, that was in the questionnaire, that's brought in, and so on. So everything is just automatically added, and everything is set up, ready to go. And we're able to start looking actually at the financial forecast and see whether things look on track for them or not. So what I want to do is just show you one more thing because of the retirement and estate plan. In this case, what we want are the children. So in the initial import of the data file to set the plan up, we're importing from that one questionnaire. But now if we want to add additional parties, there is a separate questionnaire, which is for additional parties. And I completed it. And all I need to do now is go to the import export page, select import from questionnaire. And in this case, I have a file which was from that additional parties questionnaire, which is for the children. And I just open it up. And now I'm going to import Bill Jr. And if I were to go in, for example, and do upgrade to a retirement and estate plan, what we'd see is all the data imported, and we would see Bill Jr. set up as the beneficiary of Sue's estate. So if Bill predeceases Sue, then what we'll be talking about is, Bill's assets going to Sue, and then ultimately Sue's assets going to Bill Jr. Except, of course, in the case of a second marriage in a blended family, in which case Bill could be leaving assets, for instance, to Bill Jr. So those are retirement plans. They're extreme retirement and estate plans. They're extremely flexible, very easy to set up at the beginning, and allow you to get something going with a client. So then of course there are the full financial plans. We talk more about those in the basic training second session. So what I want to do next is, instead of using the questionnaires to import data, let's have a look at creating a plan from scratch. So we're going to close this out and run VisionWorks. And if I want to add a new file, then what I do is I simply click the add button, say it's a new file, then I can select retirement and estate, or financial plan. So I'm just going to call this demo FP. You can use any naming convention you wish, client's last name, first name, whatever. So now that I've selected that, we can see the demo FP is in the files list. I click the open button. And now what I need to do is go to the about page and start adding parties to the plan. There is a default first party. So in order to enter all of these different fields, I have to click the edit button and then run down through and make different selections. So these first three fields, plan status, relationship, tax, estate status, control all sorts of tax and estate rules and regs. So to understand what the terms mean, all you need to do on your computer is press the F1 key on your keyboard, and then it will bring up a context-sensitive explanation of a principal party versus a household party. If for any reason that doesn't work on your software, then if you click help, and what's this help, then the normal help, the normal pointer turns into a help pointer. It has a question mark, and then you can click on a field and you'll get the same explanation. So this is pretty straightforward. I'm just going to set Bill up as a principal party, partner, spouse, put in first, last names. Note the disability credit checkbox. I can make his life expectancy anything I want. This is StatsCan data, but I can certainly make it age 95, for instance. And then the show output until year will just be his date of birth through his life expectancy year. Residence, Ontario, so you can pick whatever province. Postal code was something that we had, which I think we're going to eliminate. We're hopeful of including a database, which is 2,200 consumer expenditure series, broken down by 43,000 postal codes. So once you entered the postal code, then the software would populate things like the average property taxes in your postal code, for instance. I've added bill. You have to add one party to be able to move through the software. I'm just going to leave it as the one party for now. The only other thing that I need to observe is that when you're adding bill and Sue, they must be, and you're doing a retirement and estate plan or a full financial plan, they must, their life expectancy year must be separated by 1 year. And that's because this is an annual database. And what a will does is it says, for example, I, Bill, bequeath to you, Sue, everything. And Sue's will says, I, Sue, bequeath to you, Bill, everything. So if they're not separated by a year, then everything gets into a circular loop. Bill leaves everything to Sue, who leaves everything to Bill, who leaves everything to Sue, and so on. So once you're dealing with couples, then they have to be separated by a year. The only way we could get around that would be having a database, which is, let's say, monthly rather than annual, and that would substantially slow down the recalculation time. So we want to look at a few help features. There is a feature that I have turned off, but I'm going to turn it on for now. And I'll just go down to the values page so that whenever you start working with a file and you're just beginning to use the software, as you go from what we call page to page on the navigation pane, a help window comes up, explains in general what you're going to do. You're going to set up the parties to the plan, but importantly, notice the See Also button, because it shows you step-by-step instructions to set up a new plan, adding other parties, editing a party, deleting, etc. There are also these jump topics, and they will show you other little things like what's this help, for instance. Now I'm going to turn those back off because I also want to show you that in the lower right corner of virtually every page, there's a help button, and it brings up the identical help topic. So even if you've been using the software for a while, you've got those automatic help windows turned off, you can still access help on a page-by-page basis. So you can see it's exactly the same. I want to talk a little bit next about the options menu. So everybody's computer is so different these days, screen resolutions, laptops, desktops, and so on. So there's a size indicator here, and this gives you the ability to change the size of the software on your screen in order to try and capture something which is, reasonably full screen. I do not like to go completely full screen. And the reason is that if I'm working with VisionWorks, CorpWorks, and TrustWorks, for instance, I will have all three programs open so that as CorpWorks might pay dividends to a family trust, I want to see the amount of those dividends being paid. I want to go to the trust. I want to see them being received. Then I want to pay that income out to the beneficiaries in VisionWorks. So I want to see that the trust is paying it out correctly and that it's being received correctly. So I prefer something a little less than full screen just so that I can move amongst the programs. I also want you to see the color scheme. So you can actually change the colors on the software to match your corporate colors. Now, this first drop down is actually for complementary colors. So by that, I mean colors of add buttons, borders around text box, that sort of thing. So if I wanted to use red as my primary color, Actually, let's use green. So I'm going to switch to green. Now that's at first going to set green as the navigation bar color, but you can see it all in the secondary elements as well. And then I can go in and set my actual green color as my, dominant color. And what that will do is it will change the navigation pane. And as you'll learn later, all the buttons and the background colors to all the buttons will change. So you can go in and do this as part of branding. I'm just going to switch back to blue. The other thing that I'll just mention is that when it comes to color sets, output groups, assets, homes, things of that nature, or the colors for the parties, or some other things like unedited items or the values bar colors, you can change all of these. One of the issues in VisionWorks, CorpWorks, and TrustWorks is that because the functionality in the software is so extended, it's very difficult to get a good color set that doesn't involve everything in the rainbow. So if you go in and play with that, you may want to first save the default color so you can see the VisionWorks color set. And then what you're able to do is make changes, save that in your name, whatever you want to call it. And then ultimately, if you try it, don't like it, you can go back, load the VisionWorks color set back in. So you can play with that a little bit and not lose those colors as you try and work with your own color set. Some of the other help functions that I just want to speak about very briefly, and we talk much more about this later in the training, but wherever you go in the software, so I'm just going to create a home for Bill. So we've seen the page help, what am I doing on the page, and we've seen what's this help. Let me just remind you about that. Click on help, click on what's this, click on whatever you see to get an explanation of it. But also where you create assets, let's say the buy sell panel here, there is a help button and they're all context sensitive. So when you click that button, again, it gives an overview commentary on that particular feature, but the see also button gives you step-by-step instructions on how to complete the panels. Obviously, the buy panel is pretty straightforward, but the sell panel and all the changes you can make, transferring assets to trusts, et cetera, they get a little more complicated. And then also note that within these help windows, you get these jump topics that explain different rules and regs, for instance. So we'll get more into those help features in the basic part 2 training session, but I just wanted to touch on them briefly today. So those are the main things that we wanted to cover. And the real intention is just to make sure that you're aware of the 3 types of plans, the flexibility, the ability to start with something simple, if that's what the client indicates, but then to go in and show some fairly dynamic features and get the client's attention. So just to give you an idea, and again, this is a little more into the advanced training, I can go down to tactics, for instance, go to bill, go to income taxes, click optimize, and look at optimizing taxes by transferring donation and medical credits literally back and forth year by year to whomever will get the greatest advantage, share CPP, one-time election, split pension income, again, virtually year by year, do a mix of withdrawals from TFSAs and RSPs, for example, or RIFs in order to minimize taxes, take my RIF income up to the first tax bracket, and if I have any additional spending need or income need, then I'll take that from the TFSA, or at least as long as that lasts. And then there are other features like doing a meltdown. Now, in this file, I've got Bill and Sue's assets, relatively equalized. But if I go in and simply click the optimize button, this will go through, optimize the transfer of tax credits, pension splitting, and give us a result. Now, it's not very much, $23,000 through to Bill's life expectancy. That advantage gives a little more of an advantage to Sue through her life expectancy. And we also see the effect on the estate. So sometimes tax tactics that benefit wealth can work against the estate output. In other words, liquidity in the estate. So there's got to be a balance.
We're just finishing up. Just give me a minute.
We had one case where one of our clients called and said, I want to go through this to make sure I'm doing it correctly, because when he did the optimize, what came out was about $500,000 difference. And the story was very simple. The client was about to retire, $108,000 a year index pension. His wife had not worked, had a spousal RSP, but very little had gone into that over the years because of the very generous government pension the husband was getting. But basically, of course, what happened was splitting that government pension into, I'll call it two, just to make my numbers easy. Obviously reduced income taxes, one income stream tax much higher than two more equal income streams. But the big factor was that at 108 grand indexed, his OAS was largely going to be clawed back. Whereas by splitting, there was no OAS clawback. And since he was retiring at 60 and planning to 95, and given that current OAS is about $7,800, then indexed over the 35 years, it had amounted to a great deal of money. So between splitting pension income, saving taxes, retaining OAS, and because of all of that, not really having to dip into their portfolios very much or risks very much, therefore they were continuing to grow tax-free. The entire impact was about $500,000. When you think about it, it's totally logical, but until you see the number and think your way through, then it was quite surprising. So this is an excellent way, and I've seen many files that somewhere around $100,000 to $150,000 tax saving is pretty normal. So these are great cases where you can do a simple retirement plan, do a tax optimization, and pretty much immediately grab the client's attention and try and engage them in taking a much more valuable or meaningful approach to planning. So those are the things we wanted to cover today. And what I am going to try and do is, if I can remember how to do this, is to unmute everybody and throw things open for questions. Unmute, how do I unmute? Oh, I think you have to unmute yourselves individually to ask questions. So please feel free. Sorry, could you repeat that? Oh dear, hang on a second. Unfortunately, my computer, which has been doing this recently, has done a nasty thing on me. It has switched to a different set of speakers, so I'm not hearing you. Could you briefly type something in the chat box? I apologize for this. Oh, okay. No questions for one person. And there was somebody else, TSA, had some questions or a question. Do you want to type something in chat? No, you're okay? All right, well then I will bring this to a close. Thank you very much for your time. If you do have any questions and want to follow up, then please send an email to info@visionsystemscorp.com, or alternatively, give us a call. Let me just go back to the website. If you go to the website, you will see the contact page, and then you can either send an email or give us a call, and we'd be happy to answer your questions. Thank you again for your time.